What are the requirements for a VA construction loan? If you are a veteran or an active duty service member thinking about building your dream home, you might be curious about the requirements for a VA construction loan. Let's break this down step by step. First, you need to meet the eligibility criteria set by the United States Department of Veterans Affairs. These loans are specifically for veterans, active duty service members, and qualifying surviving spouses. To start, you will need to obtain a Certificate of Eligibility from the VA. This document confirms your military service and discharge status, which is essential for any VA loan, including those for new construction. Once you have your Certificate of Eligibility, the next step is to find a lender who specializes in VA construction loans. Not every lender offers these types of loans, so it is wise to shop around and compare your options. You will need to present detailed construction plans for your new home, along with standard financial documents like pay stubs, tax returns, and bank statements. The lender will review your credit history, income, and overall financial situation. While VA loans typically do not require a down payment, you should be prepared to cover closing costs. These costs may include a VA funding fee and various lender fees. It is important to be aware that the home you build must be your primary residence. VA loans cannot be used for investment properties or vacation homes. If you are on active duty and deployed, your dependents can meet the occupancy requirement by living in the home full-time. Selecting a builder is another key step. As of 2025, builders do not need a special VA builder identification, but they must be licensed and insured. The lender will arrange for a VA appraisal based on your construction plans. This appraisal is important because it ensures the proposed home meets VA standards and establishes its value. The appraisal also determines the maximum loan amount that the VA will guarantee. You can use VA construction loans to build a single-family home on land you already own or plan to purchase. However, you cannot use a VA loan to buy land alone unless you start construction immediately after the purchase. The loan covers both the cost of the land, if purchased as part of the project, and the construction costs. Once construction is finished, the loan usually converts to a standard VA mortgage. From the perspective of real estate investing, VA construction loans are mainly intended for owner-occupants. They are not suitable for investors looking to purchase rental properties or flip homes. The strict occupancy requirement means these loans are not a tool for traditional real estate investment strategies. However, for veterans or active duty service members wishing to build and live in their own home, the VA construction loan provides a pathway to homeownership with favorable terms, such as no down payment and no private mortgage insurance. In practice, the process involves close coordination between you, the lender, and the builder. Delays or changes during construction can impact loan disbursement and timelines. Keep in mind that while the VA guarantees the loan, the lender may have additional requirements, such as minimum credit scores or debt-to-income ratios. It is essential to discuss these specifics with your chosen lender. Understanding these requirements can help veterans and service members navigate the process of building a home with VA financing while clarifying the limitations for those considering real estate investment opportunities through this program.